In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boys, Keeper and Crusader, here for another What If Wednesday. If you don't know, now you know. I'm going to teach you about a little What If Wednesday. Miguelito, ¿cómo estás? How you doing?
Tiburón. I hope everybody's ready for the great crypto reset.
The great crypto reset. If you didn't see the title, it's the Great Crypto Reset. And we're going to talk to you about, we're going to do a What If Wednesday. If it's your first time on a What If Wednesday, we dive into some just ideas that maybe might be a topic that a lot of people wouldn't want to talk about. Maybe it's fringe. Maybe it's like, I don't know that I want to go there. Or maybe it's just, hey, I refuse to believe that. But we do what? With Debate Crypto, we question everything. We question the narrative. So we're going to question the narrative tonight as it relates to the crypto market as a whole. As much as we love it, we're going to question it. So that being said, join Danger Close Alpha, jump in the Discord. You guys know what time it is. Join and or follow both of our Twitters. We are giving away a New York City NFT NYC ticket. We're giving it away. What is it, Miguel?
Tomorrow night. And we're also for the people that don't win the ticket, right? Only one winner will be for the ticket. Other people will be selected for whitelist spots for the Danger Close Alpha project. So definitely interact with the tweet, get involved.
Super excited about that. Just as a reminder, guys, if you're able to go, make sure you get in there, because it's like a $900 ticket or something like that right now. So we're super excited to give that away. So yeah, do all the things with the socials. Let's smash the likes, guys. I've noticed recently we've had a good number of likes, but we can do better. So let's, everybody that comes in here, please take 2 seconds, exit out of the live chat. I know the live chat's popping, but exit out of there, smash a like, and let's get it. So let's take a quick at the market real quick before we dive into the What If Wednesday. So the cryptocurrency market, let me update this. Let me refresh. We are up 3.34%. We're pumping.
Thank you, Jerome.
We're at 967.47 billion with a B dollars, up a few percent on the day. Bitcoin was down and now is up about 2.5% at 22.5. It's, dude,
20, bro.
I know. We were literally right sitting on the cusp of 19, and we had ETH. I don't know. I forget where this was.
ETH was at 1075. I saw
hold
the
on.
lowest.
It wicked to 850 something or 870 something. I forget what exchange it was. I read an article about it a little bit ago. But it
$800?
It just wicked. It just and went right down. I think it was something to do with some of
those lucky bastards.
I know. I wish I'd had some buy orders in on that. And then we got Tether USDC, but then we got BNB at 233, Cardano at 53 cents, BUSD at $1, holding strong. XRP 34 cents. Look, guys, here's what happens. We talk about it all the time. When Bitcoin and ETH pump, the altcoins tend to pump harder. You got Cardano up 11%, XRP up almost 7%, Solana up 15%, Polkadot up 11.97%. But listen, I hate to tell you guys this. I hate to spill the bad news. But don't get too comfortable. I'm not so sure that this is going to last, but we shall see. We shall see. So, Miguel, tell me what's on the podium tonight.
The great reset, man. The great crypto reset, right? Not the other reset that other people have been hearing about, but the great crypto reset. There has been a turn. This bear market will be like no other bear market. And a lot of things are going to come out of this bear market that are going to change the future of crypto. And it needs to be spoken of. People need to find out that there's some things happening in the background and you might not be noticing.
Yeah, if you haven't been paying attention, if you're new in the crypto space, there's always people that are willing to say, "Oh, the institutions, they're pushing the prices around, or they're playing games, or they're over leveraging, they're under leveraging, they're trying to sway things in one direction or another." And Miguel and I will say that, because the reality is it's a fact. That's not even an opinion. I told you guys, I think a couple weeks ago, when I was on a plane with a gentleman from Wells Fargo, and he basically was like, "Hey, myself personally, I'm not allowed to buy, but us as a company, we are absolutely snagging up all of this crypto and getting involved in the space." So as Miguel and I were talking about this earlier this morning, I kind of said, Miguel, what if like all of, and we've had some of these discussions before, but like, what if all of these crashes, what if this huge, all of these different little mini catastrophes in and of themselves are all part of a bigger plan, are all part of something that could be bigger and better for who? Well, unfortunately, probably not for you, probably not for me. Miguel, explain to me how on a grand level some of these crashes could be so good for these institutions.
Well, first of all, it's going to cause massive panic, right?
Mhm.
And instantly, people are going to flood to mainstream media to believe or try to understand what is happening. They're going to tell you, "We told you so. Look how dangerous this was. That we've been telling you for a long time how dangerous these scams are and how
Yep.
dangerous crypto is. Don't get involved." In the meantime, these institutions are, like you said, right, scooping up crypto, scooping up
Mhm.
Bitcoin, buying it all up, buying it all up, and then when it hits this next level, all time highs, then they're going to sell you the dream how safe it is, right? Because they've packed their bags ahead of time. This has been the only time in history that I know of that the retail has front ran the institutions. We got into crypto early, crypto
Yep.
blew up, and now they're like, oh, wait a minute, we completely missed that one. Let's pull the boat back, scare everybody out of market,
Yep.
throw in regulations that are favorable to us, push
Mhm.
all these people away from DeFi, push them back onto centralized exchanges, and now we're gonna sell you back the dream on how safe it is.
Yeah. And when they sell the dream back to you, if you look back at some news articles, I'm going to pull a couple of them up. I've got one of them in particular that I want to pull up and kind of talk over on a large scale what this looks like. But if you look back, if we sat down and pulled article after article from different time periods of the space, there is, a lot of people will say, hey, all you got to do is bet against what the news is saying. If the news says one thing, you go the other way. And the crazy thing is, it's kind of right. When things were absolutely blasting off, you couldn't find an article that said anything bad about the crypto space. Why do you think that is? Well, because the investor confidence does what? It fosters that continued purchase, right? But before that, what was happening? You had massive FUD, massive fear. That's why we always talk about how you can't just buy the bottoms and sell the tops, because the bottoms and tops can be artificially created. They absolutely can. They can be
100%.
put
Yep.
there. They are put there. And who do you think they're put there by? The people that don't need the money right now. Who needs the money right now, theoretically? Would it be me and Miguel, or would it be the institutions, right? And the answer is it would be me and Miguel, right?
I got
Because
bills, man.
yeah, exactly. And these institutions have such a large amount of capital that all of their stuff is okay over here. That's taken care of. Now, this is our play money that's going to turn from play money into generational wealth for our company, for the people within our company. And that's what they're able to do. They're able to sit on it. It's like in the real estate market. If you've noticed, all of these different markets in real estate are getting the prices, the home prices are going nuts. And if you look into it, I've got a friend that's in real estate. I think I might have mentioned this before, but essentially some of these institutions, some of these hedge funds are going in and paying cash well over market value, like way over market value. Why are they doing it? A, they can afford to buy right at that price point. B, it drives the average, it drives the rate, it drives the actual average home price up in the area. And so now they own these. They've pushed the entire price up. Now, when the market does crash, they can afford to sit on it. And what will they do? They will turn around and rent it back to each and every one of you. And that's kind of what's happening in crypto. They're saying, okay, we're going to keep it down, keep it down, keep it down. Everybody's scared. Then pump, 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 pump. We're all buying, 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 because most retail investors do not do this correctly. They buy into the run, right? And
They buy
then
deep into the run, right? Because
I know, I
you're
know.
scared the whole way up. The whole way up, you're like, oh, it's a dead cat bounce. Oh, it's a dead cat bounce. Oh, it's a dead
Yep,
cat bounce. Oh, wait, we're hitting new all time highs. It's not a dead cat bounce. I'm gonna buy, and then they'll be like, surprise, mud up, boom,
yep.
dump, right?
Yep. And when the dump happens, it's, the majority of people don't take profits. Institutions do take profits. And so they have set game plans that they stick to. They have people that they have to answer to, and they will basically play the up and down game, So now let's fast forward. Let's fast forward to, actually, let me read a piece of this article real quick. And then we'll fast forward into it. Hold on a second. Let me share my screen here. Bada bing, bada boom. Here we go. All right. Crypto market crash. Heavily institutional investors sold $102 million in crypto holdings. Bitcoin fell 14% on Monday when Celsius Network, a major U.S. cryptocurrency lending provider, halted withdrawals and transfers due to extreme conditions. The action by Celsius caused a sell-off in cryptocurrencies, with their value falling below $1 trillion for the first time since January 2021 on Monday. Furthermore, institutional investors are being forced to sell their crypto holdings as a result of the crypto market crisis. Since November, the crypto market cap had plunged $961.83 billion. That's a loss of about $1.5 trillion. The outflow of digital assets products was $102 million last week. Blase, blase, blah. You look at basically inflows and then the outflows. It's not because these institutions are scared. What you have is, like last week, institutional investors' interest in Bitcoin and Ethereum fell dramatically. How are all of these institutional investors, how are they all at the same time making decisions to sell when all of the people like us,
baby.
and that's what I'm getting at, Miguel. Talk more about that.
Yeah, dude. So right, they planned out just how we saw with. There's a lot of parallels between what happened with Celsius and what happened with Do Kwon and the UST thing. You put trust into something, right? You give up custody of your crypto, which is obviously one of the biggest mistakes that people in crypto have been making, is giving up custody. Crypto is about having self-custody, but we've given that up. That aside, we give it up. We trust these institutions or these protocols for extra money, and then institutions are watching. They're not dumb. They know what's happening. They're like, wait a minute, they're giving away 20%. We're gonna take them down, right? And what did they do? There's the whole thing about how they took money from Gemini, a bunch of Bitcoin from Gemini. They made a deal with Do Kwon in the background. La 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 la. They crashed the market with Bitcoin and the stable coin, the UST that they were using. Yada yada. They crashed it. Do Kwon was given a heads up. He was pulling out funds out plenty of time ahead of time, pulling out funds, so he didn't go broke, right? He was saved because he's playing ball with the elites, with the institutions.
Yep.
Now with Celsius, same thing. Oh, what a coincidence! Everybody decided to pull out massive amount of funds right at the same time, and we're at the cusp of a bear market. Right now, this happens. There's a bank run, makes DeFi look even more unstable once again. Instantly makes politicians call for massive regulations. Whether they're going to be beneficial for the long term or not, I don't know, but they're definitely going to benefit institutions and the traditional system way over the average crypto investor. So it scares people. It makes people panic.
It creates division.
And it's all right at the top of the right at the beginning, right? Let's call this the beginning of the bear market, making Bitcoin dump even harder, right? You've already been wounded. We already have a wound from Bitcoin dumping, the market's being low, and now they're just throwing a sack of salt right into it. It's like let that sink in and burn real quick, right? And it's just too much coincidence of all these little events. Well, they're not little, they're actually pretty massive events in the crypto space, all happening at the same exact time. Then we have interest rates going up, Bitcoin coming down, looking weak as a hedge against inflation. And, it's just the whole narrative around it is very, very negative for the average investor that's not very well educated, and very favorable to institutions and traditional finances, which are going to get their hands into it. We already know, Kevin O'Leary was in Bitcoin Miami. All these old rich guys that know the institutional game have been talking about Bitcoin and cryptocurrencies for quite a bit of time now. They're going to be in. We talked about it on the channel here, how institutions came out saying that they're going to own by 2026 like a massive, like close to like 20% of their portfolios in cryptocurrencies. That's a massive amount of Bitcoin, of money into Bitcoin and cryptocurrencies. So it's all a way to scare us out, dude. Yeah, Fugazi, right?
If we look back at some of the, the different things that we were talking about, so like Binance halting withdrawals, Celsius halting withdrawals, the Terra fiasco, if you will, the dump of all of these crap coins, like all of these things, if you look at it and you say, okay, who benefited from this? It's interesting because the same people are benefiting from every single move. Now let's take it even further. Now the people that have money and can afford to sit, by the way, they used you for exit liquidity on the way down. Like literally, they are selling into the rally downward. So they are taking profits as people think that they're buying to the dip. They're buying the dip. We're not saying not to buy the dip, but what I'm saying is at some point, they're just using it for pure exit liquidity, create nothing but fear, just like the fog around the world. It creates division. We start saying, oh no, I've heard people saying, like, is this it for crypto? Like, get the heck out of here, right? And so it heads down, heads down, heads down. Now where are we at? Well, we're at a price where crypto is pretty daggone affordable. You know who can afford to buy a whole bunch of Bitcoin at 20,000? Well, these same institutions can. So it is a wave, it is an ebb, it is a flow. And so you ride the wave up because you're like buying, and then you ride the wave down. You see your portfolio dwindle. Now, when the institutionals when the institutional investors ride this ebb and flow, besides the very front end where we did, as Miguel stated, where we did get in before them, besides that first run, they are buying, they are selling, buying, selling, right? They're doing the opposite of what the traditional person in the markets are doing. Want to take a quick pause. Thank you guys for the super chats. We appreciate the love. We see you. Tom Crown, I see you in the house, brother. Looking forward to hopefully seeing you in NYC and anybody else that might be here. Let me take a quick break for my sponsor.
Yeah, we got a good question here from the chat. So Nick James says, can you guys comment or remember what pushed the prices down during previous cycles? Is this the first time the news is actually paying attention to crypto? So in 2017, people were ecstatic about CME futures, right? Crypto coming into institutional players. People were super ecstatic, and the Bitcoin price was skyrocketing for the day December 17 when it would launch. The day and minute that thing launched, instant manipulation sunk the price of Bitcoin. And I truly believe 100% all these futures that they always keep pushing for is how they manipulate the price of Bitcoin, and they keep the Bitcoin's price suppressed. Is through these futures, because they can make tons of leverage trades to push it down without actually having to physically ever even touch Bitcoin.
I want to hit this real quick.
That's the first time that something like that has ever happened. So we shouldn't buy into Bitcoin when it's down. Oh, we'll get into that. We'll get in.
Sorry, I didn't realize you were saying the first second. Sorry about that.
Yeah, and then the second part is this the first time news is actually paying attention to crypto? No, they've been paying attention to crypto a long time, right?
Yeah.
Even since 2020, when everything started to skyrocket, all the news was on how Bitcoin was skyrocketing way faster than the stock market. So they've been paying attention, and there's been a lot of news on cryptocurrencies. In 2017, CNBC and all these channels were talking about XRP, and then literally telling people that at $3 and whatever, XRP was a good buy, right? I don't know if it was CNBC themselves or it was a different on mainstream channel that literally was mentioning XRP's $3 and something buy and was like, yeah, it's a great buy.
Yep.
That was probably the worst financial advice given ever on record, right?
Yeah.
So
it's all over the place.
They've been paying attention to it for a long, long time.
It's all over the place. Somebody asked if we shouldn't buy Bitcoin when it's down. No, that's not what we're saying. If you listen to us talk, first of all, Candle Mafia in the house. What up, Candle Mafia? Tomorrow night, I want to take a quick brief pause. It's going to be an all-star lineup. Let me tell you, it's TA Thursday. What better way to celebrate TA Thursday than to bring on 4 legends? We have got, you ready for this? So CVO, your boy CVO Crypto, he's on tomorrow night. Your boy Gareth Soloway, he's been on a couple times. You're going to see him tomorrow night. We've got Frankie Candles. He's going to be on tomorrow night. And we've got TA Tim from Crypto Jebb's channel. So we've got 4 legends in the TA space coming on tomorrow night. I don't even know how we're going to handle all of the knowledge that's coming in tomorrow night, but it better be some freaking heat.
I'm rebranding TA Thursdays to the Battle of TA. The Battle of
TA. A Royale. And we can, we can battle out on what the charts are looking like. So, so buying, hold on, let me answer the question real quick. Buying when the prices are down. No. We absolutely agree that we talk about DCAing all the time. Dollar cost averaging is a simple way to do it, to continue to buy. We aren't suggesting that you don't buy on the dips. What we're suggesting is that so many people get so heavily manipulated into fear, into the panic, into selling, and they get so they get so caught up in the FOMO. And what drives a lot of this? It's the news. Who pays for the news? I'm going to give you guys a dirty little secret. Okay. If Miguel and I wanted to, okay, never done this before, but if Miguel and I wanted to, we could get onto a random news channel by paying someone to do an article about us, right? And we get to write the narrative. This is a true story. We could do it right now. And I'm talking about some headline, articles. I'm not talking about just like some podunk thing. I'm talking about Wall Street Journal. I'm talking about anything that you could imagine. We can pay to have ourselves put there. So my question to you becomes this: if Miguel and I, right, if Keeper and Crusader can get on a news broadcast in paper and put the narrative, whatever they want, what do you think these massive companies are doing? They're taking advantage of the fact that they know you're reading the news. They know what they want to do. They're going to pump when they're ready to sell. They're going to dump when they're ready to buy. That's it. Point blank, period.
100%. I honestly do believe that this bear market that we're entering or we're in or whatever is going to be the last bear market that the average investor can get into top tier projects, right? Obviously, there's going to be other projects coming along the lines that don't exist yet, but the last time that you're going to be able to buy maybe a decent amount of Bitcoin, a decent amount of Ethereum. And after this, right? After this is when the institutions are going to be completely flooded, because between now and let's say 2024 is the next bull run, right?
May 2024. I think
right?
May 4th, I think is technically supposed to be the day.
Yeah, they've already talked about interest rate hikes being increased all the way through 2023, all that stuff. So all these things are going to be affecting the crypto market, coincidentally right up to the next Bitcoin halving in 2024. Then the price is going to start skyrocketing.
You don't say.
Right?
You don't say.
Yeah, the price is going to start skyrocketing, right? Institutions have already packed their bags and they're ready to pump the markets. And what's going to happen? It's the average investor is going to be out of the crypto game. It's going to be very difficult for the average investor to get in on Ethereum, to get in on Bitcoin and whatever other top tier projects that are deemed chosen ones. Because we do know that there are some projects and some exchanges deemed as the chosen ones, and they will make sure that they succeed no matter what. So this long thought process has led me down to the rabbit hole to now say officially, I believe from now on, after this bear market is over, the only tokens that are going to be for the average people are going to be NFTs.
Ooh, so so you're bringing an idea onto What If Wednesday that's
the great reset. That's the great reset. Crypto is going to go away from the average investors, and we're going to be the only place we're going to be able to truly exist and thrive in are NFTs.
Huh. The only way that I could see that actually in that format happening is if some way, shape, or form that gets regulated into a banking product, to where, like Chainlink, for example, being an oracle, taking information from off the blockchain, putting it on the blockchain, right? The only way that I could see that full on happening would be the institutions regulating and saying, listen, this is not for public sale. This is only for institutional investors. And they, basically clamp down and say, you can't buy that. You can't buy that. You can buy maybe a derivative of it or something like that.
It's not about that you can't buy it. I think they're going to heavily focus on centralized exchanges, whitelisting your addresses, right, your wallets, on where you're sending your crypto for these institutional players to get involved and then sell institutional crypto to credited investors. They're going to restrict this very heavily. DeFi is going to be a very risky game. DeFi is going to become the Silk Road, right? Whatever actual decentralized protocols are going to be out there, anything that's decentralized or privacy layers like Litecoin, Zcash, Monero, that's all going to be the Silk Road. That's all going to be the you're into the illicit activities aspect, right? If you don't want to be, we've already seen Litecoin starting to be taking off some exchanges because of the mimble wimble that they've added to create privacy onto Litecoin. So with that being said, they're going to heavily focus on centralized exchanges. They don't want decentralized exchanges. They're going to focus on whitelisting your addresses and your wallets to make sure they know exactly where your crypto's going, who's holding it, yada yada. Make it very difficult and a lot of processes, right? And if you don't want to deal with that, then you're going to have to give up custody into some type of centralized exchange, a type of crypto bank, whatever it is, so that they can handle all that paperwork or all that issues for you. They take all those headaches away from you. So on top of that, top tier projects, right? There's always going to be shit coins until we have the crypto bubble that completely destroys, like the .com era, destroys all the shit coins, and then there's only a few coins that actually exist. Until that happens, there's still going to be some of that happening. But top tier projects like Ethereum, Bitcoin, Chainlink, Binance Coin, all these other projects, right? They are going to be very, very difficult for the average investor to get in and actually make life-changing money on, right? Actually get up above what you can do in the stock market. Everything else is going to be very, very difficult. You're going to be left with Fugazi in the crypto market to play around with that no one's going to take serious. The only other serious thing in the crypto space is going to be NFTs. They are tokens, right? People don't understand this. It's not just an art. It is a token. It is a token. It can be a means of exchange. It's a little different.
Just like how we're using it.
Exactly, right? Exactly. Just how we're going to be using it with our free mint in our Danger Close Alpha free mint. So our stimulus drop. We're stimulating the economy. So, that's where we're going to be left with. Top tier NFT projects, blue chip NFTs, where are going to be the branding and the new Web3 companies being built where the average person is going to get into, until eventually institutions take a turn towards NFTs. NFTs will not be touched by institutions for a while until they can catch up, because they're still trying to catch up on the crypto game.
So what's the moral of the story? The moral of the story here is same thing we've been telling you. Victory favors the prepared. Right. And so we've been talking about just continuing to be able to get into these top tier projects, stay away from the crap coins as much as possible, unless you're straight up gambling. Right. This is why, because of the ebbs and flows that we believe that are being pushed in that either direction, it's why we talk to you about a boring strategy like DCA. You hear us say it time and time again, but there's a reason for it, because there's like, I don't know, 4 people, and they're all going to be on our channel tomorrow night that are profitable when it comes to trading. So you better be here. But the reality is, it's really hard to be profitable in markets like this. And so you either need to be watching some people like we got on tomorrow night, or you might be one of those people. We just haven't seen what you got going on. I don't know, man. I don't know that I totally agree with what you're saying as it relates to the only thing that we're going to be really heavily into is NFTs, but I do see regulatory framework coming into play that totally changes the structure of the crypto space, which projects are able to actually come to fruition, because I think there's going to be a lot of framework that's going to say, hey, okay, you can start a project, but you have to comply with this, and this. And to do this, and this, it's almost like an IPO, right? It's not like starting an LLC. Like when we start an LLC, right? We fill out the paperwork, we pay the man, do our little thing, get our insurance, and boom, bam, slam, let's go. Get our EIN and let's go. Versus if Miguel, you and I said, you know what, we want to IPO, we want to bring something public. What has to happen to do that is insanely different. And these crypto projects that are out there right now that come out of the woodwork, left, right, sideways, up, down, aren't going to be able to play ball. They're not going to be able to jive with that. So I think that the number, when you hear people say there's 20,000, cryptos right now, and they say it's going to dwindle down 95+%, I agree with that. I think we are going to see, I don't even know, man, a couple hundred projects that have their own specific utilities, own specific utilities that are going to serve as the platforms for the new world that we're moving into. I don't know, man. I definitely see change happening, and the reality is we can continue to capitalize until then, but it's got to be top tier projects. You've got to have, listen, no, not financial advice, but you've got to have money in there that you're prepared to lose. Why do we say that? Because if you need that money, like right now, if you needed the money that you had in the crypto space and you held, it's feeling, listen, I'm going to tell you, my portfolio, right?
And I want people to know that that's not just a crypto thing either. That's with any type of investment.
Yeah,
that's just stock market thing. It's stock market, real estate, whatever it is, right? People talk about real estate all the time, like it's like a for sure thing, but it's not. You can lose money on real estate. You can. So whatever money you're investing, you need to be willing to lose it, right? So you need, and that happens with any type of investment. It's not just a crypto thing that was like only crypto so risky that you got to make sure you're willing to completely lose it. That's the only market you should think that way. That's how it's treated in any investment. But yeah, I do believe massive changes are coming during and after this bear market, and I do think that maybe this bear market will be the last opportunity to load up as an average investor into some top tier projects.
Make these
and make the massive gains.
Yeah, I do agree with that. I think that this is going to be the last true opportunity to take tens of thousands and turn it into millions. And I think that the opportunity is still there, but it's quickly dwindling. And so, Crypto Fam, what do you got to do? How can we help you with this? Well, we can continue to tell you what we've been telling you. First of all, get prepared. That's what we're doing with Danger Close Alpha. We're getting people prepared. Crypto people are preparing for the fall, the crash of the dollar. Have we seen that happening? Yes. If you saw the Fed meeting today, we're raising interest rates. For what? To try to save the dollar. I've been talking about this to Miguel for a while. They're trying to put us into a deflationary state, which is going to take a lot of interest rate rising to ever even get there. And if they do get there, we're going to be so heavily into a depression or recession, it ain't going to matter what your portfolio looks like because you're going to feel it.
So now that you said that, I actually want to say one last thing before we get out of here is when you listen to Jerome Powell talking, he was talking about raising interest rates to make inflation peak. Right, to make inflation stop. It doesn't mean stop wasn't the right word. He didn't use stop. He said another word. I can't remember right now. But basically, what he was saying was they want to make inflation like stay steady, right? Which is a key.
Well, they want to bring it back down to 2% and then keep it.
But first, they're saying that we're not raising interest rates and then expect inflation to come down. We're raising interest rates to make inflation stop at a steady rate and then work on bringing it down. But during that process of having it stop, we can hit stagflation, right? Things can go wrong. That could be a long period of time. That's not going to be 2 weeks. That's not going to be like, oh, we peaked. Oh, we're coming right back down. It's not going to be an upside down V-shaped drop. It's not going to be like that. I think that could definitely lead us into some type of stagflation, which is terrible. Look up the definition of stagflation. Guys.
Yeah, stagflation is right before deflation. Just let me just tell you real quick. It's basically where you've got things just moving. People are spending, and then all of a sudden, when people realize, oh my gosh, my dollar is going to be worth a lot more money a year from now than it is right now, they do this. They stop spending, and when they stop spending, the economy starts to slow down to a halt. When the economy starts to slow down to a halt, all of a sudden, these companies have to start laying people off, right?
And also, we're seeing that already.
Yes,
in the crypto space.
Exactly, it's happening. So they have to be careful about they have to like continue to protect that velocity of money that keep the money moving, but they also have to be careful that if they push it too far, the bell curve basically tops off, the economy comes to a halt. Now all of a sudden people are saving money they don't want to spend because they know that over here it's going to be worth a lot more money, and basically it literally will bring the economy to a grinding halt. Then we'll move the opposite direction. We'll be into a depression. It's not good. None of this is good. And I believe, and I talked about it earlier, all of this could have been avoided if we would have never turned those money printers on. We turned them on to fix a problem that I don't know that was genuinely there. We shut down all these small businesses that didn't need shut down, and we let Walmart keep on operating. We crushed the everyday man and said, you know what, big business, keep it going. By the way, we'll bail you out too if you get in trouble.
Yeah, one last thing, and then that's it. That's for me. Quick overview of stagflation is a shrinking economy with still high amounts of inflation. That's what happens.
Yep.
Low velocity of money, shrinking economy, and then we're still having high inflation. Yeah. Outside of that, is basically I think I lost the train of thought. What I was going to say about what were you just saying about before I just said this? You said, oh man, I lost it. Never mind.
He basically was going to say, join Danger Close Alpha, get in the Discord. If you're not there yet, you need to jump in. We're giving away an NFT NFT NYC ticket tomorrow night.
And whitelist spots.
Be there and whitelist spots, and be there tomorrow night because your boys, Frankie Candles, CVO, Gareth Soloway, and TA Tim are all going to be on tomorrow night. It's going to be some legends. We're going to have some fun. Crypto fam, listen, We freaking love you. If nobody's told you before today, I love you. Miguel loves you. I'll speak for him. We appreciate each and every one of you for being here. You could be anywhere on a Wednesday night, but you're here checking out What If Wednesday. So we love you guys. We will continue to show up 7:30 Monday through Saturday, 7:30 Eastern Standard Time. Don't quit coming. It's going to be hot. We're going to have some fun tomorrow night. We love you guys. Question everything.
Trust nothing.
And until next time, hodl
Like a top.
We'll see you soon.